Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is preparing a balance sheet. Here, guys, we have 3 videos about financial statement, and they should be watched in a sequence if you don't know anything about it. First one, preparing a income statement, and the link is in our video description. The second one is preparing the statement of stockholders' equity. The video is also in our video description. And this is the third one, preparing a balance sheet. So a balance sheet is where we combine assets, liabilities, and equity, or stockholders' equity. How do we do that? First one, asset section of a balance sheet. Most businesses use several broad categories of assets in their operation. Cash and other cash expected to be exchanged for cash or consumed within a year are called current assets. On the other hand, physical assets that will be used for a number of years in the operation of a business are called planned assets or non-current assets. So let's go to our Excel file and check it. Balance sheet, here we are. So, what do we have here? Our Scarpin Inc. Whoa, something is not right here. So, our balance sheet for the year ended December 31st. And then, we start with our assets, current assets. If we look at our trial balance where we grab the data, these are our accounts. These are our balance sheet accounts. So assets, let's change the colors here. So our assets until accumulated depreciation, and liabilities and stockholders' equity until dividends. And then everything else is income statement. So we start with current assets. So equal our first current asset, cash. And then our cash is here. Our current assets. And then let's copy and paste here. Petty cash. Now accounts receivable. And we have 2 accounts receivable, or 1 accounts receivable and 1 contra account. So what do we do? Accounts receivable, and then accounts receivable, net, that is, why net? Net is account less the contra account. So accounts receivable, 20,381, and allowance for uncollectible accounts, 2,909, and here accounts receivable. Whoa, receivable. Accounts receivable net. It is accounts receivable less the contra account. 17. Do we have more? Yes. We go until interest receivable is our current assets. Why current assets? Let's go back to current assets here. Because cash and other cash expect to be exchanged for cash or consumed within a year are called current assets. So here, all of these, they will be exchanged for cash in less than 1 year. So merchandise inventory, 102. And let's copy and paste. Here, let's copy and paste some. Okay, that is too much. Until interest receivable. Oh. Let me move myself here. Great. And now we have here the total current assets. And here we can go a little bit here. Better. And now the sum of all of these numbers. Okay? And then plant assets or long-term assets or non-current assets. What we have. So here we have accounts and contra accounts. So office equipment, net. What is our first one? Office equipment. And then the depreciation. So here, let's go. Office equipment, 24. Less accumulated depreciation, 13. So our office equipment net will be 24 minus 13. And then store equipment net. There are the other two. Store equipment and accumulated depreciation. So store equipment, 59. Accumulated depreciation, 18. So now we have here office equipment net equal sum these two. And now it's over because the next one is a liability. So total plant assets equal sum 88. Dollar sign here. And now what we have? Total assets. And here it goes. And also here. Okay, pretty. And now total assets, current assets plus plant assets, 274. Now, what we have? We have liabilities. Liabilities and stockholders' equity. So, okay, what do we have now? Liabilities. Let's go to liabilities. Are classified according to the length of time until they are due. Liabilities due within a short time, usually within a year, are called current liabilities. Liabilities owed for more than a year are called long-term liabilities. Here in our Scarping Inc., accounts payable, sales tax, employee, income tax, tax payable, other tax payable, health insurance, retirement benefits, unemployment tax payable, dividends payable. They are all short-term liabilities. So they are all current liabilities. So no long-term liabilities here. So we can go accounts payable. And then we can go here, 16. And let's copy and paste. Too much. Until dividends payable. Okay. Now we are good. Dividends payable. Total current liabilities. Equal sum. Oh, here we have a mistake here. Store minus accumulated depreciation. And only to double check our numbers, this I copy. So now we are good. So sorry. So total current liabilities 32. No long-term liabilities. So we have here now is stockholders equity, or only equity, or shareholders equity, a lot of different names. What do we have here? Capital stock, retained earnings, and dividends. And here, guys, take care. These numbers on trial balance, especially retained earnings, they are not accurate because we need to add our net income here. So what is the best thing to do? Oh, we don't need this additional information here. Let's grab them from the equity. Let's grab them from here. So capital stock, 75. Retained earnings. Some companies, they combine retained earnings and dividends. Some companies don't. So here, or what they usually do, retained earnings less dividends here. So retained earnings net, and then retained earnings and dividends. So retained earnings, let's come back here. Retained earnings, so it is 65 plus 79, or a second way to do that, 65 here on trial balance plus income statement, 79. That is why the balance sheet is the last one that we work with, because we need the income statement, stockholders' equity, and with these numbers we are able to do our balance sheet. And dividends, they are here, less dividends. So retained earnings net will be 145 minus 15, and total holders equity equal sum, both numbers here. So okay, and now that's it. However, we need a total liabilities and stockholders equity equal current liability plus stockholders equity, or what I usually do, the sum of it. And total liabilities and stockholders equity must match 237, must match total assets because of debits and credits, because of our double entry method and so on, and our account equation, etc. Okay, so that's it. And additional, we have a supporting schedules for a balance sheet, a report prepared to give details about an item, or a principal financial statement is called a supporting schedule, or supplementary report, or an exhibit, or notes. For instance, let's talk about this store equipment, when was it purchased, and so on. Our allowance for uncollectible accounts, how did we do that? Inventories, if we are working with periodic or perpetual method, so we can disclose additional information here. Okay, guys, thank you so much. Questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.